Hey, welcome back everybody. You're tuning in to howtoplaystock.com. My name's Kepley, and today is October 5th, 2016. In today's video, I'm going to cover just the impact that China had on joining the SDR currency basket and what that did to our currency as far as the changes to the currency basket. So I'll cover that, and then I'm also going to cover a few things on silver and why I made my investment on silver just as of last week. I'm going to cover the gold to silver ratio, and then I'm also going to cover some fundamental key points on silver that are very, I think, critical in determining where the price goes from here. Okay, and I'm talking about for like the next 2 to 3 years. So stick around, keep watching, and I'll see you in the next video. Okay, so we're back here, and I'm going to cover the changes in the IMF SDR currency basket. This took effect on October 1st, and today is October 5th. So I went out and did a little research and found the actual changes on the currencies that are in the currency basket. So we'll cover those real quick. The USD, the US dollar, is now at 41.7%. I believe it was like around 43.7 or 44%. So it has taken a 2.3% hit. Okay. The euro is now at 30.9%. Won is at 10.9%. Then you have the yen at 8.3%, and the British pound at 8.1%. Okay. Now this is the first change that has taken place since 1999. Okay, and basically what happened back then was the euro took basically the place of the German mark. All right, back in 1999. So that's the SDR currency basket. Excuse me here. This is the changes as of now. I don't know if you know, the Chinese yuan is going to play a huge impact immediately on international trade, with other currencies. But, if you watched my previous video, and I'll leave a link here in this video for that one, I specifically said that it would probably affect some of the bond purchases, that have to do with the US dollar and the Treasury note. So if you haven't watched that video, I highly recommend going back and watching that one, because you can get a better understanding of what's playing out long term. Next, moving forward though, I want to cover silver. Okay, and I'm going to cover some of the fundamentals of silver and what makes it such a good investment for long term. All right, because I didn't cover that in the last video as well. So getting started here with silver, guys. If you've been watching my videos, you know that gold and silver are money. All right, they've been money for the past 5,000 years, and we have fiat currencies in place right now, okay, which are basically masking the value of gold and silver. All right, and you'll notice with gold and silver, they're very volatile. They go up and down quite a bit. So if you're a day trader that's getting involved with silver, or you're an investor and you're in silver right now, you'll know that it's a roller coaster ride pretty much year in, year out with gold and silver. And you need to keep this in mind, because a lot of people, what they'll do is they'll basically take silver at its high points, and I'll draw it out here, just give you an example. So like, let's say you're in on GLD gold, and let's say, I don't know, you invested back in let's see here, April of 16, okay, and I'm just drawing this out. I don't know what the price actually did, so don't hold me to what I'm drawing out here on the board, because the movement in price for gold was probably way different than this. I'm just using this as an example. So in April 2016, let's just say the price of gold was at I don't know, $1,200. I'd have to go back and look, but let's just say it was at $1,200, all right? You bought in right here. And let's say the price just started plummeting, right? And let's say it went down to, I don't know, $11.50. Okay? Now what people tend to do, though, who are investors and day traders, they'll see this happen right here. They buy in at $1,200. They see the price start dropping like that, and what they do is they sell. Okay? Now, if there's one sure way to lose money, it's to panic when the price does this, and then sell all your assets. It's the most common error that people make, and that's letting their emotions get the best of them. You can't do that with gold and silver, guys. You just can't, because gold and silver are not like a company or a stock that may be around for, I don't know, 100 years, and then vanish overnight. Okay, we've seen that play out with some of the banks. All right, just recently, like back in 2008, you had banks that were worth almost $1 trillion, and they disappeared overnight. They went bankrupt. Now, can gold and silver go bankrupt? No, it can't, because it's a metal. All right, it's money. It's real money. And if you look at other countries, they still back their currency value up against something like gold or silver to measure its value. So is it going away? No, it never will. I don't believe it ever will. If you go back and you read the Bible a little bit, the Bible talks about it too. It says true wealth, all right, and this is not a direct quote, but true wealth will not burn in a fire. Okay? And that's what they're referring to as gold and silver, because gold and silver don't burn in fire. You can put them in the fire and they're not going to burn. So it's true wealth. Just remember that. And because it's true wealth, it's not going anywhere. So the price, if it goes down, all that means is that the US dollar is gaining value. Okay? And don't sell. And the reason why, again, is because that price is not always going to go down. It'll go back up. Now with silver, I'm going to cover the gold to silver ratio real quick with you, because this I thought was really interesting. Silver at the current moment here, as of today, silver is priced at $18.87, and gold is priced at $1,308 and some change. Okay, the reason why I'm showing you this is because the gold to silver ratio is something that is going to show you just how rare silver actually is and what the true price eventually is going to correct to. So if you take right now these two numbers and you take 1308, you divide it by 1887, you get a silver to gold ratio. Sorry, I keep bending down here, picking my markers up and all that good stuff. So the silver to gold ratio is, for 1 ounce of gold, it's going to take 69 ounces of silver, okay, to equal the price of 1 ounce of gold. That's what the current silver to gold ratio is. Alright, now if you go out and you do a little research on some of the experts in the gold and silver markets, and then you listen to a few of the CEO miners out there who are actually digging up the metals out of the ground right now, they will all tell you that the silver to gold ratio is more like 9 to 1. Alright, so this number here, the 69, is not really, it's not really a legitimate number if you base it off of supply and demand. And when I say supply and demand, I'm talking about if you take all the silver that's being used in the industrial makeup of products, if you take all the silver that's out there, and you try to put a number on just how much silver that is, you can't do it because it has to be melted down, has to be recycled, and a lot of, based off of the information I'm getting and knowledge from miners who are actually digging this stuff out of the ground, they're saying that you can't actually find out what the true amount of silver is that's out there in use right now because it's in so many things like computers, Samsungs, car batteries, jewelry, and etc. So you're not going to get an exact amount on just how much is out there, and even if you did, you can't recycle it, you can't reuse it because it's in, it's been embedded in other materials. So it's hard to break it down and get it back into the markets again as like a bullion silver through coins. And because of this, the supply right now is extremely low. And miners are saying right now that it's actually more rare than you think to actually find silver in the ground. All right, and because of that, the true ratio of silver to gold is 9:1. So for every 9 ounces of silver, it should equal 1 ounce of gold. And this is coming from the experts and a lot of the CEO miners that I've heard speak over the past 2 or 3 months. And I've listened to at least 15 or 20 of them talk, and they all say the same thing. So I'm going to take their word for it because they know more about it than I do, and they're the ones digging this stuff up out of the ground, So if you actually take that ratio, 9:1, you're looking at a price on silver of about $145. Okay? And all I did is just took 1308 and I divide that by 1887. Or I'm sorry, I divide it by 9 because that's your ratio. You get $145 for silver. So what the experts have been saying is that when the correction comes, when the time comes, and the central banks and the monetary policy no longer works, this silver ratio, the silver to gold ratio, is going to correct to its fair value, and the reason why is because of supply and demand. In other words, people are going to panic in times of financial crisis when the next one happens. And the next one, I believe, is going to be much larger in scale than 2008 because everything's global now. You have all the central banks printing money. And because of this, when everything starts falling apart, which it actually already is, and people actually catch on to this, they're going to, the masses are going to flee into safe haven type assets, especially with a U.S. dollar currency valuation issue like I've talked about. And when that happens, you're going to get a supply that's already really, really low with an extreme amount of demand for it, and you're not going to have, I believe that eventually the suppliers and the miners are not going to have enough silver to supply, based off the demand when this happens. And therefore, that's when your silver to gold ratio is actually going to correct itself to fair values on the market. And $145, from what I've been hearing, is actually not, it could be a lot more than that. Okay, so that's just the situation with silver right now. Again, like I was saying, if you're going to invest in silver, if you're day trading it, and you see the price drop like that, it depends on how long you want to be in your trade. Because the only time you lose your money is when you sell your assets. That's the only time you lose. And if you know the fundamentals like what I just told you about silver, if you know that, then you know it's a mathematical certainty that in time, silver is going to go up in price. So all you have to do is just hold on to it. Really, that's all you have to do. The price, again, I don't care what the price is. When silver draws back and you can buy on the dip, I would highly recommend doing it. Okay, now you can still stay diversified in some of your other assets. There's no problem with that. I'm not saying go 100% all in on silver and gold. But if you want to turn that money in U.S. dollars into more U.S. dollars, I would highly, recommend looking at it and doing a little bit of research on it and get into silver now, because where the price is going, I believe over the next 2 to 3 years, it could very easily go to $145 based off the scenario that I explained to you. All right, that's all I have for today. These are today's investors' investing tips. You're tuning in to howtoplaystock.com. If you want more information on this, I'm going to leave a link in the description below from Mike Maloney. He explains silver and shows you all the charts for that. And go ahead and hit the like button and share this with other folks. Okay, get it out there, because this information that I'm telling you right now, not a whole lot of people know about it. Only the miners and some of the experts that are coming out and talking about it are the ones that know it. So again, go ahead and share and like the video, and if you haven't subscribed to the channel, please do so. Okay. Until next time, guys, be patient, and remember, income's the outcome.